Okay, a short and sharp video on why blue sky breakouts are always better than breakouts that occur when there's a lot of overhead supply above the breakout level. I'm going to use two stocks that everyone knows pretty well as examples. The first one is Tesla. Tesla broke out in 2025 from this large symmetrical triangle. A lot of traders were looking at it and a lot of traders took it. If you look here, it base here from May until August before breaking out. The previous move back in 2024 had rallied up here to a high of roughly $490. Then it retraced, then it rallied, and then based, all right? Now, this breakout was still a good signal. People made heaps of cash on it. ProTrader system found it with Davis boxes and pattern scans and all the like. But it had one issue. There's all this overhead supply here. What that means is that the people that bought during this rally and that bought during this decline, and a lot of them are still holding and they're angry and they're upset and they're emotional and their egos have been bruised because they bought and they've been showing a loss ever since. Their investment advisors, their spouse, their family members, a lot of them know about this loss. It's a bruise for their ego and they want the opportunity to level the score. So the price breaks out and look what happens. It's a bit choppier than you'd like. Still goes up, there's still money to be made, but those huge moves that lots of trend traders are looking for, where it just trends and trends for months, it's much harder to come by. And it has a crack at breaking this high, fakes out, gets a lot of breakout traders in and then dumps. It's a classic setup and it's a classic pattern. It's just riskier because there's a lot of people waiting to dump their stock. Now, let's compare that to a more recent float that's been going nuts lately, SNDK. You can see it only started trading back here in Feb 25. Just want to highlight this Davis box scan that came up in our system when a lot of breakout traders were piling into it. Let's just take this one here for an example. There's a huge uptrend, goes from $49 to $284. Most people think it's gone too high, all right? But winning stocks, they look expensive and they get even more exy as they continue to hammer it higher. This goes up here, makes a high of 284, bases for weeks and weeks, breaks out. Now, what's the difference with this breakout? Is that there's no overhead supply. There's no resistance up there. There's no pissed off people that bought last year and they're waiting to dump their stock. Everyone's happy. Everyone that owns this stock, when this is breaking out on this day, is over the moon. Okay, no one is showing a loss. And everyone is just willing that stock on to go higher. Doesn't mean people aren't going to dump. Doesn't mean there's not going to be some huge fund manager or hedge fund manager that dumps all his stock and causes the price to go down. That is trading and investing. There's so many uncertainties and variabilities. You just can't control what's going to happen, but you can put the edges in your favor. And this has a blue sky breakout with just no reason not to go up because everybody is stoked at this breakout level. If you want to be a successful trader, this is what it's about. It's about getting the edges all behind you. The probability is in your favor. Then blue sky breakouts is such a great way to achieve that. Cheers.